My name's Charlie Viola. I'm one of the founders of Viola Private Wealth. We manage about just over $3 billion of assets for high net wealth individuals, private clients, some small family offices, some small institutional investors. We manage money across all of the asset classes. We're pretty well known in the market for taking a big allocation to private markets. Public markets are still really important. They still punch out income. They still, sort of generate good earnings growth for clients. But we're a big believer in that private market space. In private equity and VC especially, where in those funds where you're fundamentally backing the jockey, you're fundamentally backing the manager's ability to find opportunities, work through those opportunities, and then get them to an exit. Manager selection becomes so incredibly important. What we want to do in those sort of scenarios is find the managers who are experts in that space. So we're an investor in the angels funds, and we've been an investor over a long period of time in the sidecars and the funds. Okay. So we want to find the experts in that space, because the reality is I know lots of things about lots of investments. I can read balance sheets and I'm really good on the investment analysis stuff, and nowhere near as good as our CIO Daniel. But the reality is I'm not a tech expert. I don't really know where the earnings are going to go or what the subscription numbers might look like over time. We've got to find the experts, and the best way to find the experts is find the funds who are literally putting dollars out the door to this stuff. So we will take exposure. We do believe in it. The other benefit we have in Australia is that it's heavily incentivized. So, the tax effective nature of those early startup concessions mean that, there's lots of capital that flows in, and it gives a lot of these groups a real opportunity to kind of bootstrap themselves with, some sort of regulatory and government assistance, which we actually think is really important. We do the usual due diligence that we would do for any fund that we would put any client monies into. So, we want to understand process. We want to understand where opportunities come from. We want to understand, what position you take in the company. We want to understand whether or not you've got controlling positions, board seats, and then we want to understand how you're actually going to get the line of sight to exit. Once we do that, and then we understand the sector that you're investing in and make sure that we're comfortable with that, then we'll size that opportunity into the client's portfolio at an appropriate level. Our private market allocation is, depending upon the client, will be anywhere from sort of 35 to 45% across all the various different types of private market allocations. So private debt, private credit, infrastructure, VC, PE. PE and VC will be anywhere from sort of 8 to 15% of a total client portfolio. We want them to think about that part of their portfolio as producing the best return in the portfolio over a long term. Once upon a time, it was much harder to gain these types of exposures. It's now very easy, and as I said, it's been heavily democratized. People want instant access, instant investment, lots of information, ability to log in on their phone, and you're giving them all of that.